We're all in business for a reason. The problem that so many small business owners have is that they go in 10 million different directions, not really sure which way to go. Listen as your team of experts, Jennifer Glass, Daniel McCraine, and Patricia Reszetylo, go through what you need in your business to really make it stand out and benefit you. Because it's the bottom line that matters. Hello and welcome to another episode of It's the Bottom Line That Matters. Today you have me, Daniel, and Patricia with you. As of the time of this recording, Jennifer is under the weather, so she's not able to join us today. But we're so glad you are here listening to this episode. And today, what we're going to talk about is going to be one of those reports, one of those documents that as small business owners, we always hear people say, you should take a look at this report. But then when we get there, we look at it, we don't understand it. It's kind of like reading an electrical blueprint of the space shuttle or something when you don't understand anything about electrical terms anyway. Let alone what do all these terms and squiggles and lines and everything mean? So the same can be true as a small business owner. You hear financial people frequently say, you should take a look at your balance sheet in your business. And a lot of small business owners hear that term balance sheet and they think, yeah, that's for accountants. I don't know what to do with that. My accountant shows it to me and it means nothing to me. I just I file it away and I never look at it until my accountant gives me another one. So I think that's where a lot of small business owners fall. I know myself included. I try to look at my balance sheet and I sort of know what it means, but I don't always know what to do with it. Patricia, how about you? How do you feel about balance sheets?
Well, to be honest, I really haven't been doing much of my bookkeeping, so I don't even have one.
Fair enough. Okay. So interestingly enough, though, because you and I both talk to a lot of business owners, and I actually hear a lot of business owners say that as well. They say, well, I'm in a service business, so I don't need a balance sheet. I don't need to look at that thing. But there are actually some details in a balance sheet that even in a service business, even in a small business, it's helpful for you to take a look at your balance sheet. It does give you a picture of the financial health of your business, a little more so than just a profit and loss statement does. Profit and loss, of course, is the income that you're making minus the expenses that you're spending, and you hope you have something left over at the end. But the balance sheet actually gives you a better picture of the financial health of your business, not just are you spending more than you're making, or hopefully the other way around. So the important thing about a balance sheet is that even if you think you don't need one in your business, think of the balance sheet like your net worth. It's your net worth. And even as an individual person, we should all take a look at our net worth from time to time, and hopefully it's improving over time. You look at how much cash you've got saved. You look at your retirement plans. Hopefully those are growing. You look at the equity in your home, hoping that's growing, and the actual mortgage balance is declining. But that's your net worth. That's your personal balance sheet. And your business has one too, just like you do. So now that you say, Patricia, that you don't think you need to take a look at one, I hope I've
I'm not
convinced you.
saying I don't think I should take a look at one. I think I should. And my bookkeeping up to this point has been non-existent, actually. I am actually starting real bookkeeping, at least for my household, and that will extend into my business once my business actually starts functioning as a business and not just hypothetical stuff in my head.
This is
Maybe a big part of the reason I haven't is the year. Yes, sirree, Bob, it's the year. Yeah.
Yeah.
Um, so yeah, it's really important, you know. How did we do this year, this month compared to last month? You know, how did
Mhm.
we set a a budget, you know, for this month or next month, and how close did we come in on that? You know,
Mhm.
groceries and just whatever, right? And you know, do you have a positive net worth at the end of the month, or do you have a hopefully not negative? Right.
Yep. Yeah, definitely. I think you made a really good point there, Patricia. You said taking a look at it on a regular basis. You said monthly, that you're looking at the household budget. But whatever these financial reports are, whether it's for your personal household or whether it's for your business, the important thing is to look at these financial reports on a regular basis. And maybe monthly is the right amount for you and your business. Maybe you want to stretch it out. Balance sheets don't change a whole lot from moment to moment. Maybe quarterly is good enough, maybe annually is good enough. But it is important to take a look at your balance sheet from time to time. And the other important thing to know about that balance sheet, just like you're saying, Patricia, with that budget, you sit down at the end of the month and you decide, okay, how did we do at meeting our budget? That's a snapshot in time. That's that one moment in time of how well you're performing according to that financial report.
Yeah.
Your balance sheet is much the same way. It's a snapshot in time. As of today, this is what our financial report looks like. And what you do with those then is you look at the changes in that balance sheet over time. So
Yeah.
if you're looking at it quarterly, did it change much in this quarter? And like I said, if the answer is no, then maybe annually is good enough for you to check your balance sheet. But looking at that balance sheet over time, hopefully you see that the assets are growing, the liabilities are reducing, your owner's equity in the company is growing. That's what you hope you see in that balance sheet, which kind of brings us, we may as well go ahead and talk about the different pieces and parts that make up a balance sheet.
Yeah, let's do that.
Okay. Um, Feel free to chime in on this if you want to.
Yeah, I will. I
Because
will.
you have been taking that accounting class, and I
I
have
did
not.
take an accounting. I did take an accounting and bookkeeping class, and we did work with balance sheets quite extensively. It was fun. It was hard. Uh, I learned a lot. I
Mhm.
learned I'll never be a bookkeeper or an accountant for one, but it gives you it gave me a deeper insight into how a business operates.
Mhm.
You know, is it a simple business that's just, you know, inventory in, inventory out? Is it a business like, let's say, a construction business where you have payments staggered down the line? Is it a we're building inventory business, so you get wood in and you get furniture out the other side? And you know, how do you add value to each stage of that?
Mhm.
So it was really enlightening.
Yeah. Well, good. Good. All right. So I'm going to let you fill in some gaps here. So just to let everyone know, a balance sheet, what makes up a balance sheet? If you've never looked at one, if you've never had any training on a balance sheet, the idea is at the very high level, if we talk about it like from the 50,000 foot view, a balance sheet is really very simple math, isn't it? It's assets on one side equals liabilities plus owner's equity on the other side.
Right,
So
right.
when we're talking about math that makes up a balance sheet, it's very simple, isn't it? Until we start to
It
get
is
into the
actually.
weeds.
It is. It
But
is.
talk a little bit from that accounting perspective, if you could, and kind of remove a lot of the accountant talk. Just fill us in. What's an asset? What's a liability? How do we get owner's equity?
Okay. So assets are things that will typically that you're going to sell in the near future. Okay, so inventory can be an asset. Uh, have cash on hand, that's an asset.
Hmm.
Um, liabilities, of course, are things that you own. You had to buy inventory, so that went into there's some liability. You had to pay something out. You owe somebody. Maybe you haven't paid it yet, but that's in that liability column. Um, your overhead, so like what you pay for electricity and utilities and all of that good stuff, that's going to be a liability. Um, payroll can be a liability, things like that. And so you have to know where each one goes. Have your book set up correctly so it just goes right into the report. Nice. There's the cheat sheet.
Yep. Yeah.
Oh,
Yeah. So what I'm hearing you say then is assets is anything that you own. So it's the cash in the bank, it's possibly inventory, it's your fleet of trucks, it's it's anything that's
going to
tangible
make
or
money for you or is money.
yeah, yeah.
Yeah,
So anything that you own is in that asset column.
right,
And
right.
then those liabilities are anything that you owe. And like probably every small business out there, myself included, one item that's in that liability column is owner's loan to get the business
Yeah,
started.
yeah,
I owe
yeah,
myself some money, and that's in that liability column as well.
yeah, yeah, yeah. I owe myself a bunch of money.
Yeah. Yep. And then from there, it's just simple math, right? So you hope that the assets are worth more than the liabilities, but we call it a balance sheet because these two things have to balance. So if liabilities are less than your assets, then you make up that difference on that side of the balance sheet in the owner's equity column.
Yeah,
And so
yeah,
whatever the gap is between liabilities and assets, that's your owner's equity. Now,
yeah,
interestingly enough, if you owe more than you own, your owner's
yeah.
equity must
Be
be
negative.
negative, unfortunately.
Yeah, yeah,
Yeah. So, yeah, just to keep it very simple, that's how a balance sheet works. But yeah, Patricia, like you were saying, there's so many different things that go into making up the assets or what makes up the liabilities. And that's where it's easy to really get lost in the weeds.
yeah.
Yeah.
But basically, I mean, as long as you have those two concepts, you should be able to look at your balance sheet and say, oh, this is an asset. We're doing okay. This is a liability. Okay, we're doing okay on this side too. You have, a pretty good idea of where you actually are.
Hmm.
Your profit and loss statement is important, and I forget how they're related. Exactly.
No, you're right though, because there is a number that carries over that
There's
carries
numbers that
from.
carry over, and I don't remember now which way it went. So,
Yeah, yep, yeah, definitely. Yeah, that it's probably the profit. It's supposed to be an asset,
yeah, well, it's
something like
supposed to
that.
be. That's why a, you're in business.
Hmm.
I mean, if you're a nonprofit organization, there are other priorities. But it's still at the end of the day, if you're coming up, let's say $100,000 in the negative, your nonprofit organization isn't going to live very long because you can't operate at that kind of a negative. It's still a business. It's just gets its funding from slightly different sources, and it has a
Hmm.
slightly different motive than profit. But they
Yeah,
still got to pay the rent and the electric and quite often staff.
right, right. Yeah, yeah. And so, actually, what you're just talking about there kind of leads me into what I was going to bring up next, which is what's the use of a balance sheet? Besides just looking at it and hoping that it's increasing in the positive for us over time, what are some of the actual uses of a profit and loss statement? And you mentioned, Patricia, that if you're, I'm sorry, balance sheet. I keep saying profit and loss statement, balance sheet. um, but you just mentioned if you're looking at that balance sheet and it's showing a significant negative number, even after quite a bit of time, then that tells you the relative health of your business is not very healthy.
Yeah.
So that's one of the things a balance sheet is really good for, is it can help you as a business owner to make some decisions about your business. So when things are positive, let's say that assets are outpacing liabilities. What that tells us then is that you've likely got the cash, you've got the assets that are generating the revenue for you, and that you can easily cover your liabilities. You can cover those bills, especially the
Yeah.
long-term debt that you have. That's a really good
Yeah.
thing. It can also help you understand whether you truly have the cash if you need to make an investment in a business. If you
Right.
need to buy another truck or you need to expand another store, whatever you're trying to do, that
Right.
balance sheet can give you a picture of the health of your business and let you know if you can indeed actually do that.
And more importantly, it can also give your investors or the bank or whoever else is funding you that same that same concept. Should we
Absolutely.
fund
That's a
this
really good
person?
point. Right.
Yeah, they're doing okay. Look at this. They know
Yeah.
how to run a business. Let's invest in them.
Yep.
And really
Yeah.
that's what a bank does when they're giving you a loan. They're
Well, you're
investing in
right. They
you.
are. Yeah. Yeah. Very true. Very good point. Yeah. Yeah. So some of the numbers to take a look at then that are related to the balance sheet. And we've talked already about the cash that you have on hand is going to be one of the numbers that goes into the balance sheet. That's on the asset side. Cash is an asset.
Yeah.
But then there are some of those other numbers that a little harder to understand. And this is where you were saying earlier, Patricia, some things go into that liabilities column that can sometimes possibly muddy the waters a little bit. Numbers like accounts receivable or accounts payable, and trying to understand which side of the line do those two things go on? Because accounts
Yeah.
receivable, it could be easy to get confused on that and think, well, that's what people owe. They
Which
they
it
owe
is.
me, so that's a liability, right?
I, I could see where you could say it's a liability. If they didn't pay, then it certainly would be a liability. But it's also a money source. It's a revenue stream. They owe you. They're going to hopefully be paying you on a regular basis. So it's an income stream. So it would go over on the assets.
Hmm. Okay, that makes a lot of sense, especially if you've got a contract with someone. They're
Yeah.
contractually obligated to pay you. And so if they haven't paid you yet, that outstanding payment is an asset.
Yeah.
So on the reverse, then, accounts payable, you owe somebody else,
Yeah.
that would
Yeah.
be a true liability.
You bought a bunch of inventory and you put 10% down and they delivered it to you and now you have it. Or a fun one is vehicles. So with a vehicle, let's say you're a car dealer, right? You're a car dealership and you get a shipment of vehicles in and they're sitting on your lot. Well, you don't have to pay for those until you sell them.
Hmm. Yeah.
So some people are known to have people bring their vehicles back to the lot. I just park them there so that when the bank looks at how many vehicles are sitting on the lot, they're, oh, okay, all right, we don't have to charge them for this, this, and this.
Hmm.
It's
Yeah.
underhanded.
Yeah. Uh, so there's another number that's valuable for small business owners to understand, which comes from the balance sheet. So you do have to have a balance sheet in hand to understand this. But one of those numbers is called a current ratio. Sometimes it might be referred to as a quick ratio. So if you ever have an investor or a banker ask you, what's your current ratio? What's your quick ratio in your business? That's literally your assets divided by your liabilities to come to some kind of a ratio.
Yeah.
And if that's 1-to-1, if your assets and your liabilities are equal 1-to-1, then that's a moderately healthy business because at least you're paying your bills. But a better picture of the health of the business is when that number is 2 or above.
Yeah.
So your assets are twice the amount of your liabilities that you're paying. So another number to throw out there. So if you're thinking to yourself, I don't know what the balance sheet is really going to show me. Again, we mentioned the balance sheet is the true picture of health of your business. And this current ratio or quick ratio is one way to know how healthy your business is.
Yeah. I'm thinking it's so easy to get subscriptions to this and that and something else and not remember that they're even coming out. So I have taken to looking over my statements every month just so I remember what I'm buying. Oh, I should cancel that. How do I cancel this stupid thing? What is this thing? What am I paying Adobe for? You know, go try my software. Oh, okay, that's what I'm paying Adobe for. Do I want to keep that or not? But and it's a good thing to do. I mean, even though I haven't actually done the ratio thing, I will. That's an interesting concept.
Yeah, and I'll be honest, I have not done a current ratio on my business either. So now I'm kind of curious too. So hopefully, here's a challenge to anyone who's listening to this podcast episode. Then, pull up your balance sheet, calculate your current ratio, and see how healthy is your business. You're looking for a ratio that's 2 or above. For that ratio, it would be the sign of a really healthy business. So that's going to be your challenge today. So, any final thoughts, Patricia, that you want to share?
Well, I'll tell you, when we started talking about this, I had no idea where we were going to go, or how much I could even contribute to it. But it was certainly eye-opening. Yeah.
Well, good. And hopefully it's been eye-opening for our listeners as well. Yeah, yep. All right. Well, everyone, thanks for listening. I'll ask you here to subscribe to our podcast. That would be a great thing. We would always love to have some more listeners, and feel free to reach out to us and let us know what topics you'd like us to talk about. But with that, we'll go ahead and wrap up here on the balance sheet. And here's the end of another episode of It's the Bottom Line That Matters. And here's to your success.
Thanks so much for listening to another amazing episode of It's the Bottom Line That Matters podcast. We're all about helping the small business community grow and reaching as many people as we can. And the algorithms on the podcast programs love reviews. So if you loved what you just heard, consider leaving us a review. And even if you don't, I'm sure you already did, but consider sharing our episodes and our podcast with your friends and colleagues. Sharing is caring, and here's to your success. Thanks so much, and have a wonderful day.
It's the bottom line that matters.